Hi, this is Kerry Artag with Artag Advisory, and this is the AgriTalk show, the video supplement that I put out every week for the AgriTalk show on Monday, August 2nd, in which I cover three markets: December corn, September feeder cattle, and December cotton. Before I jump into the charts, I just want to ask you to fill out the free trial form and take my work for a 2-week test drive. You'll receive every day everything that I put out on a daily basis, a wide range of grain and livestock markets, and then some. You'll get a call from me early in the free trial. I reach out to find out about your trading, your hedging needs. We can talk the markets. I can explain the newsletters, and then I call again later in the 2-week free trial to see if you have an interest in becoming a regular monthly subscriber. You don't get followed up with all kinds of harassing sales calls. It's pretty simple, straightforward. You're either interested or you're not, and then you'll be put in my database, and then occasionally you'll receive a video analysis of some sort from me. But that's the extent of it. So fill out that free trial form. It's all over the website. Would love to show more of my work to you for 2 solid weeks. Let's jump to December corn. I always like to start with the big picture first. Long-term weekly continuation charts. That is almost always the underlying trend, sort of the deciding directional dynamic. And I can walk you back here that let's go all the way back to December. This bar right here, we had a buy signal above this long-term channel top that is presently at 464.5, and at the time I had 737 as like a 2 to 3, 3 to 5 month target. We got to 735.25. That's not even illustrated here. And then ultimately, I was anticipating by the end of the year, or perhaps as a summer high, 834.75. That did not happen. And when the market fell back and settled below this trend-defining speed line that was based on this high here from May at 735.25, it did not exist prior to that. When we violated it, that told me that the party was over and the market was likely to continue falling back into the 460s again over the following 3 to 5 months. And so we're a couple of months into that. Over the last 4 or 6 weeks, we've sort of settled into this consolidative framework here. This is a weekly continuation chart. It's the stringing together of previous contracts presently reflecting DEES 21. The last contract on here was in July, prior to that May, then March of 21, so forth and so on. So this is the dynamic. 662.75, our ceiling, rising ever so gradually. Our ceiling through the rest of the year rallies up into the 660, should be considered sell opportunities, whether that's long liquidation or setting hedges or setting shorts into later year. This is the zone. I'm not sure if we're going to get there or not. I will talk about that in a moment in some follow-up charts. But holding below this, the 460s continue to call this market. This is a long-term support threshold. I'm calling it our new floor of long-term support for the broader Chicago Board of Trade and corn contract, and it can absorb selling into, if not through, next year. Just know that. Let's jump to the weekly charts for the December contract only. This is December 21 contract data. And here you can see you've got kind of a rising low, descending high. This is kind of a loose wedge that's in play, defined by this 511.5 trend line off the lows. This is a level that can contain selling into later August, through August perhaps, and 599.25. This is a formation that can contain buying through August. We could trade inside this zone, 511.5 to 599.25, all the way into September trade. And not until or unless we settle outside that region do I expect one of those two levels I mentioned a moment ago. So closing above 599.25, the market can rally into the 660s, 662.75 over the following 2 to 3, 3 to 5 weeks, depending, where once again we can top out through the balance of the year. I'll also mention that on the weekly chart, you have 652.5, the weekly December only chart, I should have mentioned. Closing above, once again, this 599.25 formation, 652.5 becomes a 3 to 5 week objective, which is the start of a wide range of resistance up to 662.75. Once again, this long-term speed line. that can absorb buying through the rest of the year. And once we test this area, the DEES contract can fall back through the balance of its life into December expiration. Now, given the heavy dynamics still below 662 3/4, closing below 511.5 is the likelier outcome than closing above 599 1/4. And if we close below 511.5, and this is changing, rising ever so gradually every week, if we close below it, then that 464.5 formation becomes a realistic 2 to 3, 3 to 5 week objective. And you can see that here also, that on the DEES only chart, the December contract chart, you have 480 as the first target. 2 to 3 weeks, which by the end of September drops to 465. That 465 lines up then at that point in time beautifully with the 464.5 channel bottom or channel top. Okay, on to September feeder cattle. I'll just remind you, if you've been listening to the show, that about a month and a half ago we had a long-term buy signal in the feeder cattle contract. This is presently September 21 on this chart, but it's a continuation chart. So once again, the stringing together of previous contracts. 153.47 is our floor of support through the rest of the year and even through next year. This is a long-term buy signal. It doesn't mean it's going to take off right away. It's been a month and a half trading sideways, and now it seems to be on a kind of an upward move again. Part of this is just rolling recently from August to September contract. But here's the bottom line with this image. Holding above 153.47, I maintain a 5 to 8 month target at 184.05, which is rising on a weekly basis. So this is the bigger picture, and this is what I'm looking at right now for the broader feeder cattle market. Let's take a look at the September chart itself. This is September only data, September 21 contract, and September finds a meaningful resistance at 167.37. So the September contract, if it tests 167.37, can top out here into expiration, and from here fall back into the 150s again over the following, well, by September expiration. On the other hand, if September 21 can close this week, for instance, above 167.37, then it sets itself on a pretty aggressive bullish path, whereby 184.05 is potentially then in reach by September contract expiration. There would be enough time for a 5 to 8 week rally into the 184.05 area, which once again is this long-term channel top that can actually absorb at least seasonal highs, possibly the better part of a year. And from here, the market can fall back once testing 184.05. Let's look at the downside of the SEP 21 feeder cattle contract. You've got 157.82 this week, rising gradually, able to contain weekly selling pressures. From here, we can rally back up to that 167.37 formation within a matter of weeks. But if we close the week below 157.82, then expect the 151.92 formation within 2 to 3 weeks. And in 2 weeks from now, it rises to 153.20, and there's some symmetry then. You've got a rising meaningful channel bottom on the September only chart in 2 weeks at 153.20 that converges and coincides with 153.87. So 153 handle all over the place, solid floor of long-term support, able to contain selling through the rest of the year, and above which a long-term buy signal remains in effect for the broader feeder cattle market. If we were to close the week below 153.47 or any week back below this formation, I'll just let you know I don't have it illustrated anywhere, but I would expect the 144 handle in about 3 to 5 weeks, and honestly over the following 3 to 5 months, based on that failed long-term buy signal, the market could continue south into the mid-120s. Let's finish this with December cotton. This is a monthly bar chart, continuation chart of the cotton contract. It includes preceding contracts. We've got a 2011 high here. This is a channel structure that I've been following now for months, and it is our long-term ceiling. it is an area I've been telling cotton subscribers to sell, because once we test this, the market can fall back. This is an annual containment resistance area. Once again, monthly chart. So this goes back, the better part of 10 years. It's at 91.58 the entire month of August. If we close above 91.58, even at the end of a week, by at least a 1% margin, so you're going to be adding about 92 cents to 91.58, which should take you up to the 92. Is that 92.50? Or 92.60. I don't have it in my head. I'm going to tell you right now. 91.58 plus 0.9158 is 92.50, 92.49. So I did have it right. 92.50. If we close at 92.50, December cotton at the end of any week, we have ourselves a long-term buy signal. And by long-term, I'm talking the next year or two into the 150s. Along the way, I would anticipate this 110.15 rising channel top within about 2 to 3 months, where we can top out on a seasonal basis. But overall, closing above 91.58, the 154.07 descending 2/3 speed line becomes a 1 to 2 year target. Until then, 91.58 can contain annual buying pressures through next year, and below which, this is a weekly chart, by the way, weekly continuation chart, I'm still anticipating the lower 70s over the next, I'm still saying 3 to 5 months, but we need something to break on the way down, and that would be a settlement below 80.94. So on the way down, 80.94 can contain monthly selling pressures. Remember, this is a weekly continuation chart, so it could contain selling through September. And if we close below 80.94, then we only have about another 3 to 5 to 8 weeks to continue south into the lower 70s, the 71.85 to 73.15 region, well equipped to absorb selling on a seasonal basis. But once again, keep your eye on this 91.58. This is significant. Holding below it allows the lower 70s, as I showed you, over the next 3 to 5 months. But more importantly, closing above it by a 1% margin, we have ourselves a real cotton rally on our hand well into next year. And that's all I've got to say for this particular AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.